Hey everyone, it's Alan Brochstein from 420 and New Cannabis Ventures, and I wanted to follow up. Yesterday, or actually it was on Saturday, I did a video where I talked about the upcoming Tilray report. This was a piece that I published in the New Cannabis Ventures newsletter on Sunday, yesterday. And I had expected that we would see a very big decline in the Tilray adult use sales, and let's just say I was wrong. It wasn't the 10 to 20% that I expected. It was 30%. So actually, I was very right. I wanted to go over the Tilray report. The stock's up. I didn't really predict one way or another what the stock was going to do today. I have shared some predictions, not so much about what the stock's going to do, but what it's worth with my subscribers at 420 Investor. But what I wanted to talk about today is there just seems to be this very weird reaction to the news. I think there's confirmation bias. People look at something that supports their position and they go with it. And so there were some things in this report that were very misleading. So first of all, you read the headline and they talk about their growth. There's no growth. The only growth is through acquisitions. If it weren't for acquisitions, this whole company is shrinking. So I wanted to point that one out. And the second one that's out there, and I'm going to walk you through these in just a minute, is that the company reported a profit. Well, technically this is correct. They literally reported positive net income, but you have to understand what it is, and I'll show you in a moment. It's literally because their stock price tanked. Because Tilray's stock price tanked, they recognized a gain. And so it's crazy, but that's the way accounting works. So I wanted to walk you through some of the things that I share at 420 Investor. And so there's the press release. Well, so that's the what I had shared, the graphic that was in the New Cannabis Ventures weekly newsletter yesterday that shows this erosion in adult use in the retail cannabis market. And so as I said in that piece, what the company actually reports in adult use doesn't necessarily track what's going on in retail. And that's because what they report for their revenue is the sales that they make to the provinces. And that can be different from what the people who are buying cannabis goods are doing. But unfortunately for Tilray, it was worse. So I had suggested I think I had suggested that the sales could be down 10 to 20% sequentially, something like that. And they were down 30% on the adult use. Now, you have to really dig through to find this, by the way. They don't really put it there, even in their 10Q filing. So look at how bullish this is. Profitable second quarter. Well, really? We'll talk about that in a minute. And then net income improved. Net revenue increased. All these positive things. And so that's really it. I'm not going to spend time on the press release, but what I do for the subscribers at 420 Investor is I share commentary so they understand what's going on. And overall cannabis fell 17%. I'll show you that. And their operating cash flow was negative again. And this is a company that first and foremost talks about being cash flow positive. So second quarter in a row that they were in fact cash flow negative. So more importantly than the cannabis falling 17% in Q2 compared to Q1 was that the adult use was only 35 million, down from about 50 million. That's down 30% in a single quarter. So here's the filing, and I parsed through it, and you can see the shares outstanding, 466 million. They went up a little bit. And the company doesn't have a lot of options or warrants. Doesn't provide a ton of detail, but it has a few warrants that are out of the money for partially anyway. At 908 for 5.8 million, there's another 6 million at 595. And there's options as well. There's not a lot of them. 1.9 million. The filing didn't provide the detail. Plus there's 6.4 million RSUs. These are shares that could be created. So when I'm adding it all up, I would add those RSUs, although sometimes the people quit and they don't get them. You have to stay there to get them. So some of the things I pointed out, the tangible book value is only 172 million. When you look at other Canadian LPs, even Canopy Growth, the market caps are a much lower multiple of their tangible book value than Tilray. So there's not a lot of tangible book value. And tangible book value is taking the equity and taking out these, what in this case are big line items of intangibles and goodwill that together are 4.2 billion. So there's not a lot left when you subtract 4.2 billion from 4.4 billion. So one thing to point out, they're talking about how their profitability improved. Well, here's the way I look at it. What was the operating loss? And the operating loss actually doubled. So the sales went up a little bit. Now remember, the revenue here, or the sales that they're reporting today, is the combined Tilray and Aphria. A year ago, this number was just Aphria. So you have to add what Tilray has, which is the hemp revenue, plus their cannabis revenue. That's what Tilray adds. And then I guess another part that gets added is the beer revenue, the alcohol revenue. It's beer, but because Aphria didn't own that a year ago, or Tilray today didn't own it a year ago. So here's the cash flow from operations. You can see they're bleeding badly. 110 million used in operations year to date. Plus they've invested 23 million in capital expenditures. So negative free cash flow. Inventory, they wrote off 12 million. That was kind of buried. That's what the adjusted gross margin was about. So their reported gross margin was 28%, I think, but it would have been 43% were it not for this $12 million inventory write-down. By the way, that was one of the things I predicted in inventory write-down. The company has a lot of debt. It's not due in the near term, so it's not really a big issue at this moment, but over time it could become, and a lot of that's convertible debt and it's out of the money. So, the cannabis gross margin was 23%, but if you make their adjustment, it was, where do they have adjusted gross margin? I saw it somewhere, down the page maybe. Yeah, 43%. So I'm not going to go through all the rest. I've hit the main points, but one thing I wanted to conclude on was to answer the question, why was net income positive? So just to go back, I want to show you the net income that the company reported was, it's right here. Net income was, where is net income? Net income, loss, 41 million. Nope. Net income. Sorry, net income was 5.8 million. 5.8 million. That's because of this non-operating income that added 65 million. And so this is what I wanted to conclude with, which is why it was positive. So this 65 million of non-operating income, this is the change in the fair value of convertible debentures and warrants. And in plain English, because their stock price went down, these convertible note liabilities and warrant liabilities fell in value. The lower the price, the less an option's worth, right? It's more out of the money. Now, they also had a foreign exchange loss. These are non-operating. I don't even pay attention to these. Like, I wouldn't be telling the world I had a positive net income because it's kind of bogus. It's because their stock price went down. But I did want to kind of end with that. So I just wanted to follow up after yesterday. I know the stock price is up. I didn't say it was going to go down anyway. And I'm actually kind of glad it's up. I hope we could use some rising stock prices in the cannabis sector. And so when a company has bad news and the stock goes up, maybe that's a sign that the sector's washed out to the downside. I don't know. But I did want to follow up because the adult use sales were a lot worse than I had expected. I thought they would be bad. They were terrible, down 30% in a single quarter sequentially. And then the other thing I wanted to talk about was that net income that they reported, totally bogus. So with that, I'll be back next Saturday with the review that I normally share on that day. Take care.